Hey guys, Stock Saturday, and it's another green week. This year seems to be sort of pretty much all green so far. Kind of wondering if I should have maybe put some of my cash in. Still sort of sitting with quite a bit of cash on the sidelines. Sort of 11,000 here, some in the ISA, and some outside of everything. I've got about five or so still in the bank. Was sort of waiting to buy the crypto dip and didn't. Paid my tax bill, so there's nothing else to pay. But yeah, I kind of still am a little bit bearish, so I'm sitting on a little bit of cash. But yeah, some fairly sort of decent moves across the board, really. But a couple of sort of highlights I thought I would go over. Meta Platforms doing pretty well, up 8 or 9%, I think, for the week. And I just thought I would sort of highlight again their acquisitions. So they've been going after more sort of virtual reality and augmented reality companies. Gary Sharp Innovations sort of sounds quite small, but I had a read about them, and sort of they've got patents, quite a lot of patents on various VR and AR sort of technologies. So I guess they just thought scoop those up and get the patents. Lux XL was sort of a lens, I believe a lens manufacturer or sort of designer, so good for the headsets. I don't think I highlighted Twisted Pixel games before. They've sort of got quite a few games on Steam. I sort of mentioned Armature Studio, I think, doing the Resident Evil VR game. They sort of bought them. And Lowfelt was sort of the only other one later last year that do sort of haptic feedback technology. So, yeah, again, good for, I guess, the controllers of the headsets. So they're pushing on with the VR and AR investments. Stock seems to have bottomed a little while ago. I guess people just happy that they're sort of cost cutting, laid off a load of people. It's always harsh to see the stock sort of rise on that, laying off, I forget what it was, 10,000 or more people. But it doesn't seem to be in the sort of VR space. So we'll see what happens to them. But yeah, I was pretty happy. And they haven't released their earnings just yet, but I'm sure you'll see a sort of a projected worse than expected spending still. They don't seem to be slowing up all that much, but we'll see what happens. There was an earnings release from Intel. I'm no longer in them, but I thought I would just sort of highlight how semiconductors and sort of some semiconductor stocks are not doing so well. It seems to be a fairly poor show for them. The sort of client computing side down 36% from last year. Data center down 33%. The only things that are really up is sort of Mobileye, a small sort of part of them that they were IPOing. I guess they maybe want to spin that off entirely in the long term. So that's not really a huge boost. And Intel Foundry Services. So this is their sort of future plan, I guess, to compete with TSMC and Samsung, which not entirely convinced that would go too well. They're sort of building more sort of fabs in the US, particularly, but sort of TSMC and Samsung also doing the same. So, be interesting to see whether they can really compete. But yeah, 30% up, 14% up for the year versus 2021 on Intel Foundry Services. But yeah, and the forecast for Q1 is now forecast at a net loss. So they've maintained their dividend, but yeah, actually forecasting a loss, which they haven't been for quite a long while. It's always been, a cash machine. Guessing this is sort of partly down to the spending, but yeah, not particularly good. When you compare it to TSMC's fourth quarter, looking pretty good. Revenue up slightly from Q3. They're sort of forecasting a a rough year, but not sort of horrendously rough, just lower growth, possibly a decline in revenue, but sort of maybe not too bad compared to 2021. Still spending a fortune, capex wise, and yeah, profit up, doing quite well. Balance sheet wise, cash up from last quarter, looking pretty good. No, I believe this. I'm not sure whether they're just not reporting or whether this is no short-term debt, but that's pretty good. They had some last year, so that's good. Bonds payable is down ever so slightly, which is good. $27 billion of long-term debt, set against 43 billion in cash, and they have some sort of investments and bits and pieces as well. So probably getting on for 50 billion in sort of short-term cash and assets. And yeah, so their net cash, where again, sort of Intel, I believe, got about 40 billion in debt and sort of 4 billion in cash, with some other investments sort of totaling quite a bit, but it's not cash, so it's whether they want to sell those investments. But they're still quite heavily net debt. So with higher interest rates, if they're sort of refinancing that debt, it's going to have sort of reasonably big interest bill. So yeah, for both companies being sort of 15, 16 times forward earnings, I just see TSMC as sort of the safer bet, really, unless we get some sort of Taiwan issue. But yeah, I was pretty sort of happy with those results, and TSMC seems to have done pretty well over the last week or two, so I guess everyone else is happy as well. Got a trading update from Tritax Big Box as well. They don't sort of give you all that much info. I think there'll be more in the sort of annual reports, but yeah, not looking sort of too bad. UK sort of real estate market is looking a little bit rough and sort of poised to probably get a little bit worse, but Tritax holding up quite well. Vacant space is at 2%, up from 1.6% in Q4 2021, so that's not too bad, really. 98% occupied, and they collected 100% of rent, which was very promising. 100% in 2021 as well. Still growing in rent income. They're sort of still building, but also doing a little bit of active management, they call it. They've sort of built a couple of places and sold them on practical completion, which is interesting. They're turning into a builder now rather than a REIT. But 25 million of newly developed and vacant non-core assets. So they've built some units, not able to, I guess, not been able to let them, and decided to sell them on. I would hope they made a profit on the build. But yeah, getting into commercial developer now, which was unusual. And good to see the 12.6 years weighted average lease, which was nice. And their debt is at, I believe, 2.6%. As they say, strong balance sheet. Average cost of their debt, 5.4 years maturity, and 2.6%. So that was decent. 31% loan to value as well, so they're not sort of hugely leveraged. And yeah, market seems to have sort of liked this. It's gone up on the news. So is Tritax Eurobox as well. Just looking at the news then, not a huge amount happened. Mainly sort of a bit of US news Thursday and Friday. You had continuing jobless claims sort of rise slightly, but nothing sort of too much. GDP provision. This is provisional, but yeah, these sometimes end up getting revised. But provisional Q4 GDP 2.9%. Quarter on quarter, so I'll see that as strong. initial jobless claims, so the newest people unemployed was about 20 or 19,000 below expectations, so I'll see that as strong. And Powell's favourite, the Fed's favourite inflation measure, the PCE price index. So this is sort of similar to core CPI, but they just seem to prefer this metric, and they came in basically as expectations. So 0.3% inflation on the monthly and 4.4% on the annual, down from 4.7%. So interesting sort of, they want obviously this to be around 2%, and it's still, even on the monthly, if you sort of annualize the last few months, if you sort of look at core CPI and ordinary CPI, it's looking about 2%, but their favourite PCE is still looking at sort of 3 or 4% if you sort of annualise the last few months. So looking at the most recent data, you may say the job isn't done yet, and sort of get a hawkish statement, as they say. So we'll see what happens, but I guess kind of expecting 0.25% interest rate rise, and them to say the job's far from done, and they've got to hold interest rates at sort of higher levels all of this year. And that was basically my sort of part of my bearishness, really. I think things have sort of run away with it over the last sort of few weeks, and I didn't really see why. It's not as if they're going to be sort of cutting interest rates anytime soon, and sort of US and UK certainly, I would think, are in recession a good part of this year. Whether, I mean, people say the market is forward looking, but I kind of doubt that they're sort of looking past US and UK going into recession, then coming out of it, and sort of looking past all of that. So yeah, I still think there's a bit of bad times to come. So I did actually double down on my short positions, doubled up on the NASDAQ 100 short. So I was wrong on that, certainly a good bit early, but I still think it's got a bit of room to go. And the FTSE 100 I just left as is, sort of not really moved a huge amount. Nvidia I got very, very wrong. That sort of was touching $205 on Nvidia stock yesterday, sort of late yesterday. But I doubled my position in that before, considering sort of adding a little bit more to it with sort of the Intel poor news. Sort of guessing if people aren't buying Intel CPUs, they might be just buying AMD CPUs instead, I guess, but could mean sort of poor results for Nvidia, sort of expecting poor results anyway. And yeah, the bullishness sort of really only seems to be on the sort of AI and the electric vehicle sort of automation stuff, which is a tiny, tiny part of their business. It might be growing, but you know, if it's 10% of their business, then, and sort of 80 or 90% is not doing too well, then it doesn't bode well for me. So to be paying sort of 45, 50 forward PE for that just seems a bit crazy. So I might even add to that again, 50% down now. So it's not going too well. I don't think it's actually 50. I haven't updated the average costs on these since I bought, but yeah, it's certainly, I think it's about 36% down. Only a small amount, obviously. Still got sort of, as I say, fair bit of cash on the side, and if the market has already bottomed and we're just rocketing up from here, then I won't feel sorry to lose all of these, really. Obviously, the rest of the portfolio is doing well, and if the market's rocketing up, it generally means crypto would be rocketing up as well. So crypto side should outweigh all of this. And yeah, the IG account not moved a huge amount. Atalaya still sort of doing okay. Hive blockchain sort of coming up slightly with the crypto rise. Silvergate, everyone's still thinking they're going to get sued and fined. Chinese tech sort of not moved a huge amount. And yeah, that's really the portfolio for the week. I have sort of consolidated quite a bit over the last few months and don't sort of hold a huge amount, to be honest, now. Sort of a few fairly large key positions now. Hymex doing reasonably well. Taiwan Semi doing pretty well. Broadcom sort of up at the highs. And Process still the largest single stock position in here, at least, other than Sylvania. 10 cent sort of running away still, fairly slowly but sort of steadily. So Process is up. But yeah, let me know if you think I should be deploying the cash into sort of things, some of the things that are down. I don't really want to be buying things that are sort of running away crazy, but yeah, not sure whether to spend some of this cash or sort of hold out for a bit of a drop. See what happens with FOMC, maybe the rate rise. See what the Bank of England does as well. That might sort of have an effect. But yeah, leave your thoughts in comments below and like and subscribe. See you soon.